Hello, speaker Forex. This is Gregory. Today's lecture is on fractal analysis. Now, before you get scared and assume that we're going to get into anything complicated like fractal geometry, that is not the case. Fractal geometry is a very, very complicated mathematical subject, and we are not going to get into that at all. Now, we borrowed the term fractals because the easiest way to explain it, a fractal is nothing but a self-similar pattern. A really good example is if you take a piece of bark from a tree and you break the bark into pieces, what you would notice is that there are patterns that exist in the smallest piece. The same patterns exist in the larger piece. And you break it down as many times as you can, the patterns still exist. They're just smaller. That's all a fractal is. So when we get into trading, we start looking at highs and lows. We use the term fractals because the way we define a high and low is the same way whether we're looking at a tick chart or a yearly chart. So we just borrowed the term fractals, but it's nothing like anything like fractal geometry or anything like that. Trading is not that difficult, and it shouldn't be. So once we go through a few examples on how to identify and actually just define fractal and how to recognize them, we're just going to go through a few charts. This particular lecture should be pretty short because it's not complicated at all. It's going to tie in a couple of things like the highs and the lows that we were talking about before. So it should be a pretty straightforward topic. So what exactly is a fractal? So as previously discussed, we said a fractal is a self-similar pattern. So now we're just going to take it one step further. Now the way that I was taught is to imagine a fractal as your hand. Okay. Now bear with me, I am not a great artist. I am actually artistically challenged. So that's what happens to math guys, I guess. You either one thing or the other. And when you're really good at math, you really suck at art majority of the time. So, all right, so I'm going to draw a hand. So imagine we have a hand, so that's our thumb. Finger. Wow, that is an ugly hand. It looks more like a paw. Alright, so yeah, that is a hand. It's a very ugly hand, but nevertheless, that's what it is. So a fractal basically is the middle finger, okay? And so this is how we define a high when we look at a price chart. So we're looking for 2 to the right and 2 to the left. So basically we're going to look at 2 lower highs on both sides of the fractal, which is actually the middle candlestick. So the way this looks like with a chart, so we have, imagine we're approaching a resistance, right? And prices are trending up. And then we have something like this. This is a fractal because the middle bar has 2 lower highs to the left and 2 lower highs to the right. Now these highs can be in any order as long as both of these highs are lower than this high, if that makes any sense. So there's many variations. So for instance, if we have something like this, let's say that's still a fractal. This is an up fractal because we have 2 lower highs to the left and 2 lower highs to the right. So if you compare them both, you can see that these highs on the left are in different orders. But it doesn't matter because as a whole, both of these highs are lower than the middle high. And the same thing to the right. You can see that both highs are in different order, but they are both lower than the fractal high. Okay, so this is a fractal. This pattern will exist within every single time frame. You look at a tick chart or a yearly chart, it doesn't matter. This is how you define a high. And that's why we call it a fractal, because the self-similar pattern, it always exists. So if we have an uptrend and we're approaching a high, when the market turns, like you see these highs here, they always end in this formation 100% of the time. If it's a true high, it will always end in one of these formations. Okay? Now, the reverse scenario is true as well. I'm going to draw another ugly hand, and I'm pretty sure I will butcher this one as well. So let's say, okay, that's the skinny wrist and the ugly thumb. It's like an alien. Ah, look at that. All right, so we have the same thing but in reverse. This is our defining fractal. Now previously we had the middle fractal. We had lower highs to the left, lower highs to the right. Now we have higher lows to the left and higher lows to the right. Okay, so basically we're looking for 2 to the left and 2 to the right. So that's all you have to remember. So when you're approaching a low or you think a low is being established, is there 2 to the left and 2 to the right? If so, it's a low. But if it's not, then it's actually not a low. Okay, so a few examples of a fractal when you're looking at a candle. That would be ideal. So you have 2 bars to the left with higher lows. You have 2 bars to the right with higher lows. This is your ideal fractal. But you come in many variations. So a similar situation, let's say we have that. This is still a fractal because we have 2 higher lows to the right and 2 higher lows to the left. Different variation, same thing. These patterns will always, always, always define a low, and this will always, always, always define a high. There's no way around it. Now, you can have many bars to the left and many bars to the right. Let's say there's 6 on the left and 12 on the right. It doesn't matter because you're only focusing on the series of 5. Okay, so as soon as you get 2 to the left and 2 to the right, it's a fractal. Okay, so these are very, very important because what's going to happen is that when you start identifying highs and lows, and you want to understand like where these lows and highs are coming in from and how to define it, once you start to see these patterns form, you know that the lows are confirmed. Okay, even before prices rise, you can see this formation start to form. Then you're like, okay, we have an established low here, so you know that you can start doing your Fibonacci retracements. Or let's say we have we have a downtrend, and as we're approaching the previous low here, we have one of these fractal formations. We have something like this, right? So we have a fractal, which is basically an established low off of a previous low. So now we have official support there, and you can buy here with relatively low risk because of the fractal formation that's already formed. So it's pretty easy stuff. What I'm going to do actually is I'm going to pull up a few charts, and actually this particular charting software has fractals already built into it. I think most charting software packages, they have that nowadays. I think that's pretty standard. And so we'll throw some fractals on the chart, and we're just going to go through a few. It's pretty easy to recognize, and you'll start to see what I'm talking about and how everything blends in with highs and lows, the price wave model, support and resistance, then everything will start making sense. All right, guys. So just hang tight, and I'll be right back.